We say culture is important, culture matters. Well, how?
We're powered by our brains. We're not always rational. We are influenced by others.
I think I'd start with looking at what's called the better than average effect.
So one of the things we look for picking flight directors is that what we call command presence, right? You kind of just look at people like, you better get it together. We got stuff to do, right?
Good practice would be for a leader to say, well, this is a mistake I made recently, and this is what I did about it.
I can't emphasize enough the disempowerment of the lonely decision maker.
So the opposite of what we think of as an ethical decision frame, we can think of as a game frame.
It doesn't make you unethical to wrestle with this. The smart money is we help you to try to figure this out.
This is Banknotes, Banking Culture Reform. The views expressed in this podcast do not represent those of the New York Fed or the Federal Reserve System.
Hi, and welcome to the Banking Culture Reform podcast, part of the New York Fed's initiative to drive awareness and change in financial services culture. This series, Norms, Mindsets, and Decision-Making, explores questions like, why do ethical people do unethical things? How can organizations encourage staff to speak up and executives to listen up? And what role does context play in shaping people's behavior? My name is Tony DiCario, and I'm a member of the New York Fed's culture team. Today's guest is Mikael Down. Mikael is the Executive Director for Assessment, Policy, and Insights at the Financial Services Culture Board, an industry body that assesses culture at financial institutions in the UK and also helps to design cultural interventions at member firms. Mikael was a speaker at the New York Fed's 2017 workshop on culture measurement and at the New York Fed's 2018 conference exploring progress and challenges in reforming culture and behavior in the financial services industry. In this episode, Mikael shares with us, among other things, some of the surprising ways the pandemic transformed firms' relationships with their employees. Hi, Mikael. Thanks for being with us today. Before we get into our conversation, could you please explain your role and what it is you do at the FSCB?
So my name is Mikael Down, and I'm Executive Director for Assessment and Insights at the Financial Services Culture Board in the UK. We were originally called the Banking Standards Board. We were set up in 2015 by 7 of the biggest banking firms in the UK to help raise standards of competence and behaviour across the UK banking industry with a particular focus on organisational culture. So I joined pretty much from the start, and my role has evolved many times since then. But really at the core of it are kind of 2 things. One is providing annual culture assessments for all of our member firms on the basis of a framework and methodology that we developed for measuring aspects of organisational culture that are important, we believe to be important. And secondly, to try and figure out what works in terms of changing culture, raising standards of behaviour, competence, designing behavioural interventions and running those on a trial, developing good practice, bringing together members of the Banking Standards Board to learn from each other so they can share and exchange good practices as well. That's really the way that we operate. And we have been going since 2015. And the reason for the name change, drum roll, is because we have extended our remit across financial services, so broadening scope beyond banking to cover all of FS.
Can you talk a little bit, Mikael, about what motivated you to work on culture and what drew you to what was then the BSB?
I was working for the UK government when the financial crisis happened. I was actually out in Brussels at the time working in a diplomatic posting, came back to the Treasury, which was my home department. Everything was pretty scary around that time, as you guys will know as well as anyone. And became involved in the early kind of regulatory response to the crisis, focusing very much on the prudential side of things, the new capital requirements, structural changes to banking, and then a number of conduct reforms as well, culminating with going across to the FCA, Financial Conduct Authority, which was at the time a new regulator in the UK, and developed there the senior managers and certification regime, which again, as you know, focuses very much on governance and accountability of senior leaders and material risk takers within originally banks and building societies, now all financial services firms, and including a designated responsibility for culture. And taking a step back from all of this, one of the things that I observed was there was this kind of progression in terms of the focus of policymakers and regulators from safety and soundness, which was necessary after the events of the crisis, through to looking at factors that we now consider pretty fundamental, but weren't perhaps seen as quite so fundamental before, around treatment of customers, conduct, duty of care towards customers, and market integrity, onto responsibility and accountability within governance frameworks, and looking at the failures that had happened in that front as well, and that being an important part of why the crisis happened. There was no focus on how organisations actually function and operated all the way through this process. It was actually, to their credit, the UK Parliament who really first called this out and said, look, in a report that they produced, there have been numerous failings, but actually the biggest failing really has been that professional standards and culture. So this idea of an industry body to help with that process of reform, not through a regulatory fiat, not through compulsion, but certainly not through any advocacy either, was born. And I was working at the FCA at the time. It was a kind of tiny little part of my job to kind of keep an eye on this sort of review into this kind of new body that was kind of ongoing. And it felt very important. It felt like something that was just had been missing from the debate. And it was also something the regulators have a very, very strong interest in, but it's very difficult for them to compel to the extent that they can get too far in the details of it. It has to be something that has to be owned by organisations, and specifically their boards and their executive teams. It felt incredibly important. And I was really excited to, join this from the ground up and figure out, well, actually, okay, we say culture is important, culture matters. Well, what sorts of aspects of this kind of huge amorphous topic do we focus on? Where can we make the difference? And how can we track progress? And that was the intellectual challenge that we faced, but also I would say the moral imperative for the industry as well.
So much of what you talked about strikes me as, when you were talking about how this can't be done by regulatory fiat, it's so different from what regulators and frankly bankers are used to, right? Because you can have all the right rules and regulations and controls. And so I guess the first thing that I'd love to explore with you is the question of why ethical people do unethical things. What is it that happens to bring about bad decisions from people who otherwise have perfectly good moral compasses?
I mean, this is such an important question. I fundamentally believe that almost all people are fundamentally good or have the potential to be good. And, what we see all too often, have seen within the banking industry, but not just the banking industry, when something goes wrong, it's typically people who are directly involved in that incident who are punished. And often that is entirely appropriate and merited, particularly when people are acting illegally, negligently, unethically. But what about the environment in which that took place? There are some things that are genuinely an anomaly, but that's often the minority. There is too much focus, and has historically been too much focus on bad apples and not enough focus on the barrel. So I think this brings it back to why culture is important. Every single person has individual responsibility and accountability to their organisation, to their stakeholders, to their customers, to the regulators, whomever, individually, and that's important. But collectively, the organisation they're operating in, the environment they're operating in, what sorts of behaviours are championed, rewarded explicitly, implicitly, what behaviour do they see other people undertake, how able they are to give voice to concerns, and the extent to which those concerns are listened to and acted upon, the degree of pressure that they feel, the sense of purpose and connection that they feel with their organisation and its objectives. All of these things will have a huge bearing. And there's so much research on this, on the way in which they behave. We saw during some of the mis-selling scandals in the UK, upstanding citizens doing terrible things, signing forms for a PPI product on behalf of their customers in order to get the commission. But these people don't go home and look at themselves in the mirror and call themselves a bad person. Everyone needs to be a hero in their own story. And it's very, very seldom you see people believe that they are themselves predisposed to act unethically. But we all have to recognise that we have that potential. And it's important for an organisation to create an environment in which that sort of behaviour is not incentivised, is actively disincentivized and discouraged, and for senior leaders to set that tone. So I think there's such an important connection between an organization's climate, its culture, and all of our weaknesses and fallibilities to sometimes do things that we really shouldn't.
You mentioned a lot of things that influence norms and behavior. One of the things that you mentioned was escalation and what the environment is for people to speak up and whether they feel that they can speak up, as well as whether they feel that they can be heard if and when they do speak up about something they see that's gone wrong. What elements do you think are necessary to create a culture in which people do feel comfortable speaking up? And what's required of management to be able to hear those concerns?
This is a really, really critical part of understanding organizational culture. And it's a big part of the survey and our assessment framework, the questions that we ask. And one of the questions that we ask is whether people feel comfortable challenging a decision that's been made by their manager. And when we first asked this question, less than 2/3 of people said they felt comfortable. And so we wanted to understand, well, why that's the case. So the next time around the survey, we asked them, well, why? Do you feel able to speak up? And if not, why not? And the results that we got were surprising to us, because there were significant numbers of people who said that the reason they didn't speak up was because they were afraid of recrimination or blame. So they attributed fear as one of the reasons, which is probably something that you would expect. We often attribute and associate speaking up with whistleblowing, people reporting kind of egregious issues that would have severe consequences for the organization, for other people. So there's a natural element of fear to do that. But the thing that surprised us was an equal number of people said they didn't speak up because they felt nothing would happen. So in other words, futility was the barrier, not fear. And this is really important to understand, because the intervention that you need to address one is not the same as the other. And this tells us that in order for people to be able to speak up, psychological safety is vital. And, again, there's been a huge amount of research on how to create psychologically safe cultures. But that isn't all that you need. You also need, in order to have a voice climate, you need a listening culture, and to see listening as a form of communication. So, for example, Professor Jim McNamara at the University of Technology in Sydney has done some amazing work on this, seeing listening as an integral part of communication, and particularly focusing on listening by senior leaders who are often better at talking than they are listening, and listening to external stakeholders, listening to customers, and providing a feedback loop, even if that feedback is to say, we've heard you, but we don't agree. There's, his research shows that has, even closing the loop in that way, has a really positive impact on voice climate over and above silence, which has a extremely negative effect on voice climate.
That's fascinating. I haven't heard about that research. You touched on this a little bit. I'd love to hear some more about your thoughts on the apple versus barrel question. So there definitely are academics out there that focus on the individual aspect of morality, especially in ethical decision-making. Though I think the debate that you and I have heard for the most part, or the kind of side that you and I have heard for the most part, is the barrel argument, that really your ethical decision-making is mostly influenced by your environment. I'm curious as to what your thoughts are on that kind of debate. How much of decision-making is driven by individual motivations versus kind of group norms?
It's a big question. So there's an interesting angle to this, which is looking at the role of purpose within organizations, because that's what connects the organization to the individual, right? That was one of the things that connects. There's been some really interesting research that's been done on this by Navar Ashraf at the London School of Economics, to suggest that the extent to which employees see their roles as meaningful is linked to the extent to which they see it as benefiting others. So this is the whole concept of what she calls altruistic capital. And we incorporated this into our survey one year, where we asked people, to what extent do you see your work benefiting others? And we ran correlations between this question and some of our core questions. And what we found was that employees who said that their work had a positive impact on others, and who also felt valued by others, were more likely to say that their firm responded effectively to staff feedback and they were more likely to say that they were treated with respect. Those who felt that their work had a negative impact on others were more likely to agree to both of those statements. So I think there's something really powerful within there about organisational purpose and meaning, and how to create an environment in which there is an alignment between what the organisation says it's about and how people see their role within that organisation. And trying to achieve that alignment is, I think, an important part of leadership and a part of culture.
How does having a sense of purpose impact staff's ability to make good decisions?
I think it increases levels of social capital and trust within organisations, and it allows decisions to be delegated. Because if everyone is effectively aiming at the same target, then you need far less controls in place to be able to monitor whether subordinates are acting in the way that superiors want them to be. It enables a more flat organisational structure that relies less on hierarchy. And again, there's been a huge amount of research to show that's much more effective. The interesting angle to this, though, is diversity, equality, and inclusion. And saying that there's a common organisational purpose shouldn't imply there's a single view about how to tackle difficult problems. And in fact, it's absolutely vital there's diversity of views, and that those views are all brought to bear in taking decisions and judgments. And this is particularly critical for organisations such as yourselves, where you have a public duty, but also organisations such as banks and building societies, where building societies in the UK, savings and loans in the US, who have the public mission, really, because their license to operate derives from their ability to serve their customers and serve the needs of society. They need to be representative of the society they serve in order to do that, in order to be able to ensure that in the decisions that are made that are affecting customers, they are being taken, factoring in a broad range of perspectives. And I think that's something that has certainly over here, and I know in the US as well, come to the fore, particularly since the events of last year. But there is a long way to go. And so when I talk about having a uniting organisational purpose, it's really important to understand that as something which enables organisations to move forward in the same direction while welcoming a diversity of views in as to how to do that and how to solve individual issues and problems as they arise.
You mentioned a few things that have happened during the course of the pandemic to influence how organizations expect decisions to be made and how they expect staff to incorporate various perspectives into decision making. Are there other ways in which you think the pandemic has changed the way that people make decisions? One of the examples that occurred to me was the potential kind of isolation of working from home away from your colleagues might impact decision-making in certain ways.
Yeah, so again, we did some research on this. When we ran our survey last year, we did ask a number of questions about whether employees saw their firm's response to the pandemic as being positive across a whole number of metrics towards employees, towards customers, towards society. And actually, overwhelmingly, the results were very, very positive, which is to the credit of all of those firms operating in phenomenally challenging circumstances and delivering an essential service when we all needed that. The interesting thing is when you cut that by where employees were physically located, because as you know, it wasn't possible for all employees, particularly in banking, to work remotely. And there was a difference in perception of fairness of the organisation between those two groups. Those who were remotely based were more likely to feel that their organisation was fair than those that were based on site, which is interesting and maybe slightly counterintuitive. It's possibly because leaders were hugely focused on ensuring that the person who's on their own is at home is okay. And actually, the other thing that we found from our research last year is there was much greater connectedness than there had been before between line managers and their colleagues who they were responsible for. They checked in a lot more, and there was a much more of a human type interaction, even though it wasn't physical. When you ask people to describe their leaders, they were more likely to describe them as authentic and human than before. And actually, again, counterintuitively, seeing senior leaders in their very nice kind of big home offices actually was welcomed by a lot of people. they understood that not everyone had the same setup in their home environments, but the fact that they could actually see their bosses or very, very senior people compared to them, the environments they were in made them more human. There was evidence that we had to show that a number of people felt that Zoom meetings were actually a leveler. People who would never normally have been able to intervene or felt able to intervene because they didn't get their hand up or their voice up quickly enough. They always felt shy. They were talked over by someone. They had the hand function, which gave them a permission to speak. And these are kind of some really interesting dynamics that perhaps we didn't predict or think about. I think the really interesting question is going to be, and it's the question on everyone's minds at the moment, is when things start to unwind, what kind of workplace are we going to design? And one of the things that we are really trying to emphasize is that you need to build that around some aspects of culture that are really important to bear in mind. Things like communication, decision-making, inclusion, fundamentally organizational justice. How are opportunities distributed? That's going to have a huge impact on the culture of organizations and their effectiveness and levels of staff engagement and well-being.
I wonder what you think about whether there is something about financial services that drives ethical or unethical behavior and decision-making. Is there something unique to financial services that makes this problem more salient for the financial sector than it is for other sectors?
I think, one of in the many sort of post-mortems that were conducted of the financial crisis, one of the, findings from some of those pieces of research was that the fact that financial services deals in money makes money more salient, therefore encourages greed. I'm slightly on the fence on that one, but I do think that saliency and the sorts of issues that are salient are really important and actually drive behavioural norms and influence culture very heavily. Now, if you look at the work that's happened in the banking industry since the crisis, certainly in the UK, a number of firms have made conscious efforts to make the customer perspective more salient, combined with other interventions too. There's one firm that introduced quite early on what's called the yes check, which is, a number of questions that you have, 4 questions I think you had to answer before recommending a product to a customer. One of those being something like, would you sell this product to a family member? To put the customer at the centre of the ethical decision that you need to make in order to take a decision. I think the other issue that has become more salient, and I mentioned it before, was equality and inclusion. It's spoken about much more now, particularly since the killing of George Floyd and the protests that followed that, both in respect of race specifically, but actually more generally. You see senior leaders talking much more frequently and with more authenticity about the need for greater diversity and inclusion. Now, that's not enough, but it helps to provide the context in which those further conversations and further action can take place. I think the next challenge for the industry is how to make salient environmental issues around climate and biodiversity, where the financial sector has an absolutely vital role to play if we're going to meet the Paris goals and on the UN Sustainable Development Goals more generally. I think a big part of that is about making issues part of the day job for people, not something that's done on the side of the desk. And I think progress has been made on that front in respect to customer outcomes, but there's a lot more that needs to be done on that, but also a broader range of societal issues too.
Yeah, there's also the question, of course, about whether banking in particular bears a greater responsibility because of the unique role that banks play in society. Do they actually have to be better than everyone else?
Yeah, absolutely. And the regulation, they benefit from the depositor protection, that they benefit from the liquidity support they have access to. These are fundamental reasons why banks have to continue to earn and reinvest in that social license. To my personal reflection, I've been so used to dealing with banks as institutions. You know this, right? When I was a regulator, when you're a policymaker, you get the front end, which is normally the sort of the person that's put to give you a sort of formal position from the firm, and you see it as a monolithic institution. Firm X thinks this. Take a step back. It's ridiculous to summarize the view of one firm that has maybe 50,000 employees. And you realize when you speak to people that people really, really care. Most people turn up to do a great job. And it sounds kind of cheesy, but it's true. But it's actually realizing that there is a very significant number of people across the industry who want to do the right thing. And it's about creating the environments for them to do the right thing and continuing to highlight where things need to improve, but to doing so in a way that also supports as well as shows them where the barbed wire fence is, as it were.
That's so interesting. There's research that shows that you will behave in the way in which you're expected to behave, that other people's expectations have a significant impact on your behavior. But I was thinking about it and related to what you were saying about people working in banks, reading every day in the press and social media about how people think they're terrible, how people think they're greedy, how people think, that you must be awful because you're an investment banker who works for this terrible, what was it, squid, evil squid organization. And is there the possibility that people's expectations of your behaviors grind you down so much that ultimately you are going to act in the way in which you're expected to act?
Absolutely. And the more you can encourage people to bring their own selves to work, this goes back to the diversity inclusion point, the more you can kind of move away from that sort of stigma, right? You've got people who are there to do a job in a way that is consistent with their values, is consistent with their beliefs, and encouraging that has got to be the way forward.
Mikael, you've been doing this for a while now. I'm curious about what keeps you at this. What really energizes you about the work that you're doing?
I think the fact that the industry is changing and the issues are changing so rapidly. So there is the common themes that are always important in pretty much any organizational context. And these are the core things that we try to measure and monitor. But the external environment is changing all the time, and if you look at the issues now that boards are grappling with, diversity and inclusion, we've talked about technology change, environmental change, ESG type issues, inequality. These are issues that are changing and shifting all the time. And the pressures on boards and executive teams, the needs of society, which banks serve, is shifting and changing. Demographic changes, societal attitudes, intergenerational differences. There's never a time to stand still. And you've got to keep alive to how the external environment is continually shaping the internal environment. What are the things you need to continue to measure and monitor, and the things that you need to always ask yourself, what's next? What's going to come that we need to make sure that we're starting to ask the questions now so we can anticipate where the next sort of challenges might be. And that's what keeps this fun.
Mikael, I know that in your personal studies, you're looking at artificial intelligence and ethics. Can you talk a little bit about how your work over the past few years led you to this and what you're hoping to achieve?
The thing that led me onto it, and the connection to my studies originally, was we were thinking about our data and we were starting to build up, a really amazing data set. I was kind of interested in how we could use it, but I wanted us to use it kind of responsibly. And I came across Cathy O'Neill's book, Weapons of Mass Destruction, which is now, very famous, but at the time hadn't been around for very long. I use it as an example with my team of how data can be used, irresponsibly and with a broader set of undesirable, unethical outcomes, to understand it myself and to give them some case studies for that. But it kind of inspired me to think about this issue in a bit more depth. The more I thought about it, the more I thought this is kind of quite concerning. And we're used to talking about issues related to AI now because there's a lot more awareness about it and research going on into it. But around the time there wasn't much. And it kind of struck me as something that hadn't really hit the banking industry yet. There were a few fintechs on the fringes experimenting with it, but it was, of course, used heavily within social media, big tech. And I sort of worried about, what happens when this translates across to organizations that have absolutely vast amounts of data on customers' behavior. And there is an opportunity for that to be used as a force for good, but there's also a huge opportunity and risk of detriment, whether intended or not. And so I just thought, this feels important and interesting. And there's, of course, always a cultural aspect to this, because when you look at the way in which machines operate, it's tempting to think of them as kind of autonomous black boxes, but they're designed by humans. And the decision-making that goes into every single process that leads to the creation and the deployment of a machine learning algorithm through the data cleansing, the engineering process, decisions taken about how and in what way the AI will operate, they're taken by humans. And it goes back to the point we were discussing at the start of this. Humans are influenced by their environment, and therefore the environment is going to have a big bearing on risks such as those particular to AI. Of course, the fact that AI is so complex makes it very difficult to spot and monitor these risks. And that is also an interesting analogy to the complex derivatives that were traded in the head of the financial crisis, where they were hugely complex. They were traded largely in volumes by people who didn't fully understand what they were trading, and the risk that they were bearing is quite interesting parallels with the use of AI. So really what I wanted to get in my research, which you'll probably need to get narrower because these are lots of big questions, well, actually the lessons from the financial crisis that we can learn to help inform us and guide us as we seek to deploy AI in a responsible way within financial services. And then what organizational hygiene factors need to be attended to in order to make sure to stand the best chance of making sure that the design and use of these algorithms are a force for good rather than a force for bad.
Is there any further reading or other media out there that you would recommend for anyone that's interested in learning more about any of the topics that we talked about today?
Well, I think if you're new to organizational culture, you can start with Edgar Schein. It's where everyone starts, but it's kind of, it's pretty much the best place, I think, to get a grounding on it and why it's important, the methodology and some really, really interesting case studies within that. I think in more contemporary, I think Gillian Tett's work, her new book in particular, I think is within the context of financial services, a really interesting study of actually using the discipline of anthropology to understand and observe organizational cultures, including within finance. So that's a good book. I would also recommend Taking the Floor by Daniel Wenzer, who has done an ethnographic study within Wall Street on the culture of a trading floor. And that's an extremely good read. I really like the discipline of ethnography as one which is a really, really powerful lens to view organizations. And we use some of that as well with the work that we do. Of course, I would recommend the FSCB website, but also the compendium that you guys have at the New York Fed, I think is an excellent go-to. I use it a lot to be able to find out who's saying what on this topic from across the world. And it's an excellent place to find out some kind of key speeches or pieces of research or initiatives that are happening across the regulatory community and beyond.
Well, that's kind of you. So final question. I think you've kind of answered this a little bit in talking about some of your own work, but is there anything, and this doesn't have to be related to culture, that you're reading, listening to, watching, that you can't stop talking about, that you want to share with the world?
Well, one of them is Mariana Mazzucato's new book, Mission Economy. That's, I think, a really, really powerful way of looking at organizing a system across government, private sector, academia to achieve a common goal. So there's a big study of it in The Moonshot, but actually, the application of it is around looking at some of the challenges that face us today, including the imperative to get to net zero. That's something I've read recently, which I thought was very, very thought-provoking. And sort of back to the sort of stuff that I study off the side of my desk on the AI side, I really recommend Deep Medicine by Eric Topol, which is a really good way of actually getting into AI. If you're curious about AI and you want to understand it, he describes it really, really well.
Thanks so much, Mikael, for being with us today. It was good to talk to you.
Good to talk to you too.
For more conversations like this, as well as publications and other resources related to banking culture reform, please visit our website at newyorkfed.org/governance and culture reform.